Hey, g'day all. It's Lindsay. I just wanted to jump in quickly. There's been quite a bit happening in the last week in the US financial markets with the collapse of probably I think they're calling it the 16th largest bank in the United States, the Silicon Valley Bank. Now, I want to preface by saying that while it was a large bank in assets, I think it was holding around about 212 billion in assets and funds. It's certainly not an old bank. It's only been around a couple of years. In essence, the bank was designed to help tech startups, hence called Silicon Valley, I guess, and the venture capitalist firms that support those. So that was essentially their major market. If you know a little bit about the banking industry, the US is similar to Australia in as much as all of the deposits that go into the bank don't just sit at the bank. Of course, what they do is they lend out a majority of that money to earn income, to then be able to pay interest rates and so forth to depositors. Generally, the bank will hold around about 10% in currency or liquidity for people to allow for people to draw out their funds. Generally, that works pretty well. There's generally no real issues there. But what happens is, and this is what happened with the Silicon Valley Bank, is there was what they call a bank run, where there were a large number of depositors, or possibly just simply some, in this particular case, I think it was not so much a large number, but more large dollars of depositors looking to pull their money out. So quickly, what happened is, as I mentioned, Silicon Valley Bank was highly focused on the tech industry. The pandemic, and particularly post-pandemic, has been very, very hard on tech and crypto, as you would know. So there's been some significant drops in those areas. What has happened is some of the Silicon Valley Bank's largest clients have got themselves into some financial distress and needed to pull back all of their funds. This left Silicon Valley Bank quite low on reserves. So what they needed to do is they needed to look to try to raise funding in case, of course, if more clients wanted to pull funds. Try to do a capital raise. That did not work. That sort of thing also can spook the market, and I think that's probably what's happened with a relatively large bank doing a capital raise, trying to look for private equity support. That has failed, but I think that's also put a little bit of a nervous tension in the market, particularly in the tech sector, which then, of course, started a little bit more people looking, going, okay, this bank might be in trouble. We need to pull our funds out of it. And then what they were forced to then do was look to sell. They had a lot of their assets, and this is where possibly they've made a mistake over the last few years, is they had a lot of government bonds they had bought, treasury bills, back, well, around about the pandemic time when the interest rates were 1 or 2%. So they've invested a large sum. I mean, I think they were talking about 3 to 4% of their income into that, which is quite large. So they needed to look to sell those, and they would need to have sold those at a significant loss. So again, giving you some really quick background on how treasury bills work. You buy a bill from the government guarantees you whatever the interest rate return on that bill is at the time, which is about 1.5 to 2%. Generally, they're on a 10-year yield. So you've got 10 years, you'll get the return, and then the government will buy the bond back. If you have to sell it in the meantime, you need to find another buyer who will buy that bond off you. The problem is, at the moment, current government bank bonds are at current interest rates, which would be about 4% in the US. So nobody is going to buy a bond at 1.5 to 2% yield when they can buy one directly from the government at a 4% yield. So therefore, they needed to look to sell the bonds at a significantly reduced value, hence the very large loss of capital. That did panic investors, and then therefore there was a bank run, and the government had to step in, basically. In the US, and again, there's a similar situation to some degree in Australia. If the bank is a reasonable sized bank and covered by the banking regulations, understanding that there are some very, very small banks, and they use the term bank loosely. There's some very small financial institutions in the US not covered by government regulations, but any reasonable sized bank is covered by what they call the Federal Deposit Insurance Scheme, or company. which basically ensures all deposits in any bank up to $250,000. Now, what the government has also done, the US government has stepped in and said that they're going to guarantee all funds at the Silicon Valley Bank to all of their depositors, all of the clients. They're not guaranteeing the bank, the shareholders of the bank, as far as their money is concerned, if you are a shareholder of the bank or an owner of the bank, but they certainly are guaranteeing all deposits by all of their investors. So, that's where it's really at. I mean, the cause of this, at the moment, I would have to say the volatility in the market is probably what's seen this happen. We are seeing massive volatility in all markets, in currency markets, in tech markets, crypto markets. Even now, we're starting to see quite a lot of volatility in housing markets. There's quite some significant drops here in Australia at the moment with the rising interest rates. The US not quite as much so, but certainly the rising interest rates, as you can see here, have had an indirect effect on this. Going forward, I'm going to watch this space really closely. I'll keep you updated as to go. I think there's one or two other smaller banks that have also had some bank runs on them in the past few days as well. So it'll be interesting to watch and see what happens in that respect. I also was just reading only today that there's been a couple of major investors in Credit Suisse, a very large European bank, that are getting very nervous as well. So it'll be interesting to watch this and see how this plays out. One of the things that the US government may do, or the Federal Reserve may do, is actually pause on the interest rate rises. I think they were banking in an interest rate rise again here in March, but there's a very good chance now that they may pause on that and let the dust settle from this first before they commence interest rate rises again. It may even change their entire policy altogether. I'm not entirely sure. It depends on how much impact they see this having on the financial sector. Understand this has no impact directly, particularly at this stage, but it has no impact directly on the US housing sector, the housing market at all, apart from if the Federal Reserve decides to change their interest rate policy. Then we may see an impact, but we'll have to sit back and see what happens. So I'm going to watch this. I'll keep you updated on what's happening, what the impact is at the moment. I really think the volatility at the moment is what we're seeing here. We're now starting to see it in the financial markets as well. Really, all I can suggest is diversification is probably one of the best things you can do. Not having all your eggs in one basket, not having all your investments in the same region, not having all the same type of investments, and possibly even not having all your money in the same bank could be a good idea to diversify risk at this point in time. But again, I don't necessarily see any impact, particularly for us as foreign investors. We're not living in the US, so there's certainly not a lot of impact on us. But interesting to watch. So I'll keep you updated. I'll let you know if there's any more anything more happens. If you're in Melbourne on the 25th, 26th of March, come down, see us. We're at the Property Investment Expo at Melbourne Convention Exhibition Centre. I'll be doing a couple of seminars there as well, and I'll be talking about this and the impact it has on the housing market, if any, at that stage. So we'll have a couple more weeks under our belt then. So pop down and see us. If you have any questions, please pop them in the chat. Send them through to us. I'm happy to answer any questions I can. Certainly can do a bit more research. If I'm unable to answer the question, I'll certainly try and find it out for you. So hopefully that was a little bit helpful. Please let me know if there's anything else I can do to give you a little bit more information. All right. Cheers, guys.